It's no secret, DeFi is smoking hot right now. That sentiment is hard to quibble with, seeing that the entire DeFi ecosystem has over $3.5 billion in value locked up in it. However, the biggest DeFi projects like Maker, Compound, Synthetics, and Aave all have one thing in common. They all operate on the Ethereum blockchain. Now, wouldn't it be great if there was a project that could bring all that DeFi goodness to assets outside of the Ethereum ecosystem? Well, there is a project that does exactly that, and its name is Kava. My name is Guy, and in this video, I'm going to tell you everything you need to know about Kava. I'm also going to explain why this DeFi project offers a value proposition that you simply cannot ignore. And finally, I'll go over the reasons why I think Kava could be a game changer for DeFi, and I'll explore the tokenomics of both Kava and Kava's stablecoin, USDX. Now, before I get going, there are a few things I need to say. Don't let the t-shirt fool you. I am no financial advisor. I'm just a chap that loves crypto and tries my best to bring you the best educational content possible. So if you're looking to dabble in DeFi, make sure you consult your financial advisor and do your own research. Now, with that out of the way, I want to give anyone new to the channel a warm welcome to the Bureau. I regularly put videos on different cryptocurrencies and give you my insights on the crypto markets. So if that is something you think you could get value from, then hit that subscribe button and flick on those notifications. That way, you'll be jacked into the Coin Bureau matrix. Right, enough jibber jabber, let's get into this. Now, for those of you that are new to Kava, I need to give you a bit of an overview of the project. If you're all clued up, then feel free to skip ahead to the rest of my analysis using the timestamps provided below. So, Kava's vision is to become a cross-chain DeFi platform which offers stablecoins and lending services to the holders of major cryptocurrencies. Basically, Kava is all about opening up access to liquidity for different crypto assets to people like you and me, and doing that in a decentralized way. That's all done by providing open access to loans in the form of a stablecoin, USDX, which is soft-pegged to the US dollar. In short, Kava aims to extend a lot of DeFi's current capabilities that Ethereum currently enjoys and bring that over to other blockchains. So, how do you access that liquidity? Well, you can send your crypto collateral over to Kava's platform, and the asset is then escrowed in the smart contract run on Kava. Then, a US dollar price for the asset is determined by the Oracle system, which is essentially a collection of price feeds. Whatever the median price of the asset is across the different price feeds, that's the price used by Kava to determine the USD value of the collateral. The awesome thing with Kava is that you can customize the collateralization ratio. So you can open a collateralized debt position, CDP, with $100 in BNB collateral, and $20 in USDX can be minted if you wanted to get a loan for the minimum amount. This would give you a collateralization ratio of 5. The important thing to know is that a CDP must maintain a collateralization ratio of above 1.5 or it will be liquidated. So in this example, if the value of my BNB tokens hit $30, then I would have my BNB liquidated. To get your crypto collateral back, all you need to do is repay the loan plus the stability fee to unlock your collateral at any time. Yes, stability fee is a fancy term, but all it refers to is a variable fee based on market dynamics. The primary factor for determining the fee level is the volatility risk of the asset, hence the name stability fee. The more volatile the asset, the higher this fee will be. So to get your collateral back, you'll need to settle that stability fee in Kava tokens. Do that and you'll get your collateral back. So what is this fee? Well, for Binance Coin, you'll be paying 5% to unlock that BNB collateral. So I know what you're thinking. What blockchains and assets does Kava currently support? Well, the platform was launched very recently and only supports BNB coin right now. However, Bitcoin and XRP are coming soon, and it's theoretically possible to support all major crypto assets. Oh yes, I nearly forgot to mention how you can earn high yield income on your crypto using the Kava platform. By the time this video hits the tube, you should be able to earn that sweet yield by becoming a USDX minter. Basically, if you mint USDX using BNB collateral, then you'll get a share of 74,000 Kava tokens a week. So, how are those minting rewards distributed? In our example, let's say that there is a total of 1 million USDX globally, and I minted 100,000 USDX. That would mean that I'd get 7,400 Kava tokens, or a tenth of the weekly Kava rewards. Here's the thing though, to be eligible for your share of those rewards, you will not only have to mint USDX, but you need to keep your BNB staked during the week too. Now, while these rewards seem pretty neat, it does make me wonder whether Kava loans could be applicable to your average person. After all, at face value, it looks kind of crazy to entertain the idea of putting up $200 in crypto collateral and only getting issued with a $100 stablecoin loan. So let's take a closer look at that, shall we? Here's the deal. If you take out one of these over-collateralized loans, you effectively get that amount of margin to use to buy more crypto. Then you can put that loan back into another loan and further leverage your exposure to the asset this way. The reason why many people find over-collateralized loans confusing is that most traditional loans don't require you to put up collateral at all. Instead, you're borrowing against your future cash flows. The downside of that system is that you need to hand over a ton of identity documents to a third party, have a reasonable credit score, and find someone who's willing to give you the credit in the first place. That's all well and good if you want to borrow a few $1,000s. However, I can nearly guarantee that if you ask your bank to lend you a pretty hefty amount, say $500,000, then most people will have to put up their house in a reverse mortgage as collateral. But here's the thing, the house is always worth more than the loan they give out. If that weren't the case, then the chances are that the lender could not be in business for very long. Over-collateralized loans in crypto work in a similar way, and the same is true at Kava. Your crypto is always going to be worth more than the loan you get. What's neat about offering over-collateralization is that it allows Kava to offer these loans algorithmically. This is also what makes Kava algorithmically stable. And speaking of algorithms, I'd love to spend a few moments to tell you about Kava's tech. So let's jump onto that. Kava is built using the Cosmos SDK, which is an open source framework for building public proof-of-stake blockchains. This means that Kava uses the Tendermint core consensus engine. This is a Byzantine fault-tolerant engine that's designed to support proof-of-stake systems. Another thing that this SDK brings to the party is interoperability. That means that Kava can bring all its utility functions to other blockchains. That interoperability is a huge deal in my book. Think about Maker and how it can only accept ETH or ERC20 tokens, for example. That is quite limiting and ties the future of the project to the growth of the Ethereum ecosystem. With Kava, on the other hand, you don't have to rely on one ecosystem. Another neat thing about using the Cosmos SDK is that Kava can leverage Cosmos's modularity. What that means is that as new open source modules are developed by the Cosmos ecosystem, then Kava can choose to implement useful modules easily. Now, if it sounds like Kava have just used off-the-shelf solutions, then you would be dead wrong. Basically, there are 4 key modules that make up Kava's core architecture. The auction module implements 3 auction types that control the supply of bad debt and any surplus in Kava's CDP system. The first is a forward auction, which acts the same way as you would bid for an item on eBay. The second is reverse auctions, and finally there is something known as a forward reverse auction. A price feed module has been developed to post accurate prices on the Kava platform. Another awesome feature is that the addition and removal of assets and oracles are controlled by community governance proposals. The CDP module basically allows Kava users to create, modify, and close CDPs for any collateral type within the price feed module. And finally, you have something called the liquidator module, which tracks the status of CDPs based on prices in the price feed module. This makes sure that collateral is seized from CDPs whose collateralization ratio is below the threshold set for that asset. The collateral seized is then sent to the auction module that I mentioned earlier, which then sells off the collateral for stablecoins. So, what happens if the auction module cannot sell off enough collateral to cover the loan? Well, if this happens, Kava tokens will then be auctioned off by the auction module for stablecoins using the reverse auction system. This will be done until the collateral ratio is eventually reached. What this means is that in the event of under-collateralization, the Kava token is the backup plan for the platform. And that is now a perfect segue for us to talk about Kava's token, or should I say, tokens. The first token is Kava, with ticker KAVA. This is the staking and governance token on the platform. On the governance side of things, the token works in a similar way to Maker in the MakerDAO ecosystem. Kava holders can vote on proposals to make changes to the blockchain or set system parameters. This includes things like supported collateral types, collateral debt ratios, etc., etc. Now, while voting is a great way to take part in the ecosystem, you're not obligated to do it yourself. Kava holders can delegate their voting rights to validators who also secure the network. If you want to see who the top Kava validators are and what sort of commission they take, then you definitely want to check out mintscan.io. I've linked to that in the description below. When it comes to staking rewards, Kava is currently earning hodlers around 5.5% per year. Yes, that's not the highest staking reward out there, but it's not too shabby either. Of course, this staking reward is variable. Like other staking coins, the more funds that are staked, the lower the returns, and vice versa. So if not a lot of people are staking, then the maximum reward will be 20%, and if a ton of tokens are staked, then the reward will fall to a minimum of 3%. So why the heck would someone want to hold and stake the Kava token? Well, here are a few reasons I've come up with. The first is that owning Kava tokens is a bit like owning shares in a decentralized bank that sets interest rates and controls the money being printed off the back of all those crypto reserve assets. Now, I know I've mentioned the word bank, and I know many of you are thinking about running for the hills. However, let me explain. The way I think about the Kava CDP platform is that any crypto asset put into it, like Binance coins, is essentially a reserve asset. After all, it is this collateral which USDX coins are essentially being minted off the back of. As soon as someone puts in crypto to take a loan out, the protocol just prints USDX and there's no counterparty there at all. It's just the smart contract code that is issuing you that loan. When you repay that loan, the USDX is just destroyed or burned. So in a way, holding Kava tokens is a bit like owning a part of the decentralized Fed. What's also cool is that you can vote and support ideas you want to see on Kava. For example, you might want to have the option of getting your loan paid out in a euro stablecoin. The second reason revolves around why you would bother staking Kava in the first place. Sure, it might be easier as saying you want to get a 5.5% return on your money through staking rewards. However, what's really happening with those staking rewards is inflation. There are 33.5 million circulating Kava tokens right now, and a total supply of about 106 million. Anyone who stakes gets those inflationary rewards, and everyone who doesn't effectively gets taxed. Basically, non-stakers see their Kava holdings shrink as a proportion of the circulating supply. It actually acts almost like a tax on speculation. After all, if you're actively trading a token, you're not staking it. The third reason to hold the token is that the central bank of Kava has a deflationary lever. Anyone who pays back their loan has to pay a stability fee in Kava tokens. This is set at 5% at the point of shooting this video. Once the fee is paid, the Kava is then burnt. So that's a deflationary mechanism. This means that if the Kava CDP platform is widely used, then the Kava token burn could quite easily offset the inflationary pressure of staking rewards. After all, Kava can essentially add every major crypto asset and support it as collateral thanks to its interoperability. I somehow get the feeling that when XRP is added to the platform, that quite a few hodlers will want to leverage their positions via over-collateralized loans. Let's face it, Maker and Compound are for ETH and ERC20 crypto assets. Imagine if that demand was replicated outside of the Ethereum ecosystem for other major crypto assets. Kava really could be processing an insane amount of over-collateralized loans in the not-too-distant future. But don't forget, people will want to get their collateral back at some point. And of course, they need the Kava token to unlock it by paying that stability fee. It really could be the magic formula to increase demand for the token, whilst overall reducing its supply. And as we know from Economics 101, this is positive for price. The second token of the Kava platform is their synthetic US dollar stablecoin USDX. There's a little bit of controversy around this one. Allow me to give you the broad brushstrokes. Essentially, if you search USDX in CoinMarketCap, you'll find a stablecoin, but it is not Kava's. Kava has accused a project called dForce of stealing the USDX token, so just be aware of that. So here is the big question. Why bother using USDX given that there are literally dozens of stablecoins out there? Well, firstly, it's fully transparent. Unlike centralized fiat-backed stablecoins, you can see exactly what is backing the supply. In this case, it's collateralized crypto debt. No need for trust, you can instantly verify. Another reason to use USDX is that Kava is decentralized and it cannot really be shut down. That's not the case for other stablecoins like Tether or USDC, which both have centralized companies behind them. It would be very hard for a government to shut down a network spread throughout the world on a number of nodes. The third reason to use USDX is that you can bond it and receive interest based on market dynamics. You have to remember that USDX has collateral behind it, and you need the Kava token to unlock that collateral. Part of that stability fee that is charged to unlock collateral is then returned to the USDX holders. This means Kava can create the savings rate for USDX. So, how much interest can you get right now on this stablecoin? Well, how does 4.5% per year sound to you? Oh, and here is one more reason USDX should be considered. It uses Chainlink price oracles. Okay, I'm a bit biased here, as you folks will no doubt know, I am a Chainlink proponent. But access to secure off-chain oracle solutions is essential for USDX to function. After all, if the data delivered is inaccurate or easily manipulated, then the entire DeFi ecosystem that relies on the stablecoin becomes, well, unstable. What Chainlink provides is a battle-tested oracle solution not only for USDX, but for the entire Kava platform. If you want to know why I have such faith in Chainlink, then you might want to watch my Chainlink video right here. Of course, my analysis on the potential of the Kava token and the advantages of USDX all hinge on the actual adoption of the platform. We already know that Maker, Compound and Aave have done pretty damn well on the Ethereum blockchain. So by providing an interoperable solution, the hope is that Kava could replicate that success and bring DeFi to a whole host of other assets. Alright team, this video is getting pretty lengthy, so it's probably time to share my closing thoughts on Kava. What really excites me about Kava is that they've designed the system so that they can plug in any synthetic asset they want. Think exotic currencies like the Philippine peso or Thai baht. Or how about commodities like oil, gold or silver? Kava could issue a synthetic asset pegged to literally anything that has a price. That could give rise to a plethora of new ways that these assets could be used in the DeFi ecosystem. I know Kava opted to offer a USD stablecoin in their go-to market strategy, but you can't take your eyes off the bigger picture. The Ethereum-powered DeFi boom has been an impressive one. With Kava, I have that niggling feeling that being able to offer similar functionality for the top crypto assets outside of the Ethereum ecosystem could well be a slam dunk. However, I should not get carried away and add a bit of balance to all this. It is true that Kava's CDP platform only supports BNB right now, and it does slightly confuse me why Bitcoin wasn't the first asset added. Maybe it was some sort of deal made at the time of Kava's IEO launch on Binance. At the time of shooting this video, the platform has only been live for a few weeks. Smart contract risks are a real concern, and the protocol has not been as well battle-tested as some of the popular Ethereum-based platforms. You also then have to consider certain liquidation risks that come from Black Swan events. Let's not forget the Black Thursday MakerDAO vault liquidations. This saw over $8 million liquidated from the vaults as opportunistic profiteering took advantage of a rapid fall of the price of ETH. With all that being said, I cannot find fault in the tokenomics of Kava, provided that the platform actually continues to attract users, list more assets, and continues to grow. So if you think DeFi really is the new financial paradigm and you want non-ETH exposure to it, then Kava could be a good shout. And that's it today, folks, my overview of Kava. I've done enough talking and now I want to hear from you. What do you think about Kava? And have you got any questions? Use those comments below. You've made it to the end of this video, so I assume you found it somewhat useful. So don't forget to slap a like on this video and subscribe if you want to see more videos from me real soon. Thanks for hanging in there till the end. I really appreciate the support. Now that I have you, I want to share something quite important with you. Have you heard of my weekly newsletter? It's my way of succinctly crystallizing my views on the crypto market for the week ahead. Nowadays, I also share unique insights on particular projects as well as juicy coin tips. So, do you want to join? Well, now is the time. Head on over to the description. Down there is a link to my sign-up form. When you're on that page, all you need to do is enter your email and hit submit. That's it. You will receive a confirmation email upon which you are locked, loaded, and ready to go. I'm currently working on my next email, and that is one you won't want to miss.